economy that has a very mixed picture. Brazil is the country, if you guessed it, that I was talking about. On the one hand, that country has an estimated pipeline of $3 trillion in capital investment. It will also be playing host to several high-profile international events like the FIFA World Cup, like the Olympics Games in the next few years. But on the other hand, Brazil's Bovespa index is one of the worst performing indexes in the Americas this year. It's down almost about 30%, languishing at around two-year lows. Earlier this month, the Central Bank of Brazil reduced its estimate for the country's economic growth due to the fallout from the global economic slowdown. Well, to discuss these matters and some of the products that clients in the region are looking specifically at, we're now joined by Stuart Allen. He is the CEO of one of my favorite magazines, I have to say, Latin Finance, and Joaquim Levy is the Chief Strategy Officer from Bradesco Asset Management. Gentlemen, it's a pleasure to have you all with us. Thanks so much for coming in. I want to start with you, Stuart, first of all. I mentioned some of the things that we've been hearing out of Brazil. I was speaking to Francisco Aristeguieta from Citigroup earlier this week, and he said to me, you know what, that's a blip. Long term, there's a very, very strong story in Brazil. Tell us what you think.
I think you have to unpick the short-term and cyclical factors from the long-term and secular ones. And I think when you look through the present and probably coming months of a little bit of turbulence and perhaps weakness, then the long-term investment thesis of Brazil is very compelling.
Tell us why it's so compelling.
Well, it's built on the inevitability of things like demographics, very favorable demographics in Brazil, the growing middle class. The middle class in Brazil has grown quite rapidly, but GDP per capita is only $11,000. So a lot more middle class yet to come. The extension of credit to that middle class, and all of the sectors that benefit from the demand that's bringing to Brazil.
Well, Joaquim, I want to come to you. You are the Chief Strategy Officer from Bradesco. Just tell us a little bit about your company and how much money you have under management. Just give us a flavor of what kinds of business that you're conducting in Latin America.
Okay, Bram is part of Bradesco, which is one of the largest banks in Brazil, and actually is now among the 10th largest banks in market cap in the world. Bram manages about $130 billion equivalent in assets, mostly in Brazil, both as fixed income as well as equities. And we do participate, have been part of the IPOs of the last few years. You do see a big transformation in the stock market in Brazil. Actually, it's always important to recognize that the stock market nowadays goes well beyond the Ibovespa index that you mentioned, that is still dominated by some key, very large companies like Petrobras, Vale, which are, of course, a household name for any investor. But you have a very vibrant market of companies with capitalization around from 1 billion onwards that are geared towards the domestic market. And they have a behavior of themselves, and I think we are very active participants, and we have developed special knowledge about these companies.
Okay.
I think it's important to recognize that the index does not represent the full breadth of the Brazilian economy now. It's still dominated by financials, by commodities, by utilities.
Absolutely, but now you do see a number of companies from healthcare, education, everything also related to infrastructure, which is a sector that is booming. You mentioned that all this investment that's coming to Brazil, and although some of the key players are not listed, you have all the other companies that provide our suppliers to these players that are listed. So this makes a lot of depth and diversity in the equity market.
John Havens from Citi in his opening plenary talked about the fact that the Western world is not necessarily poised for actually accessing a lot of these markets, and this is something that they really need to work on in order to grow their businesses. What would you, as a person operating out of Brazil and South America, what would you say that you feel is one of your biggest frustrations when you have to deal with some of these companies in the North America and European region?
Well, let's put that way. In our very own field, if you look at the way the allocations, which is what part of a portfolio is put in emerging markets, and in particular in Latin America, and you compare that either with the size of these economies or, more important, the growth, the recent growth and the outlook of growth and the contribution, for instance, for the growth of consumption of these countries, is very clear that the share that now goes to emerging markets and in particular goes to Brazil is much smaller than the size of the contribution that these economies, including Brazil, is giving to the world economy. So if you are, for instance, a pension plan, you're talking about a big institution in the North Hemisphere, and you have to meet your objectives, and you have to ensure that you're going to have the money to pay all the liabilities in the future, you have really to think hard where growth you come, where returns you come, that will allow you to meet that. And there I think we're going to see, we're still already seeing, but you're going to see a big shift in the type of allocation. And in Brazil, we are preparing our market, not only equities, but increasingly fixed income, private bonds, to receive this capital, because this is where growth will come in coming years.
Sure. And Stuart, I want to mention, you know, we're starting to see more North American, Europe being cut out, and you have China, South American trade flows are increasing quite rapidly. Tell us how you think that is going to continue to play out with some of the other Latin American countries.
Well, I think that the China and broader Asia demand story obviously has been a great benefit to Brazil, but you know, possibly counterintuitively, the truth is that Brazil and most Latin American countries, with the exception of perhaps Chile being the most salient example, are not export-focused economies. They're driven by domestic demand. And so at the margin, yes, increasing demand, or conversely, falling demand from China will not have an enormous effect on these domestic
Because
economies.
that's one of the things people are starting to talk about, a possibility of a hard landing in China. It may be that, you know, with the new Chinese leadership that we're expecting in 2012, what if China were to move from being an exporter into a producer stroke importer? That's going to give a lot of people a run for their money.
Well, then you would rotate out of Chile and into Brazil.
Yeah, absolutely. I think, I mean, Brazil is poised to benefit to inward shift in China, because it's true, we export iron, we export other things, but if the more they go to domestic market, we now have energy independence, and you have surplus in oil in a couple of years. We have, of course, surplus in food. So for most of the domestic demand in China, we are in a very strong position to be a key supplier for them. So I think that even a slowdown in China, of course, this may create a lot of changes in the world economy. Will imply higher interest rates because there will be less savings.
Sure.
But in terms of trade, for Brazil will not be negative in no sense.
And the domestic demand story that I referenced earlier in this conversation is an opportunity for China. We've seen Chinese companies setting up manufacturing facilities in recent months in Sao Paulo for cars, for motorcycles. The Chinese are investing in the utilities, which is obviously a demand for electricity as a play on economic growth.
Yeah, let's definitely get to some of those specifics now. Let's talk about some of your clients. Tell us what some of the key trends, quite specifically, have been.
Our clients, well, we are making a move outwards, Brazil, in particular in asset management. Why? Because as you get higher income in Brazil, you also see a greater desire for diversification. So not only Brazil is very attractive for foreign investors, and we've been able to attract from in Asia and Europe and so on, but also increasingly we're going to see outflows to other markets. Even if, of course, particularly in fixed income, returns in Brazil are still much higher than in other places.
Yeah.
I think just for the sake of diversification, we're going to see that. And I think that we are creating new products to attend that, especially, for instance, pension funds. The government has recognized the importance of this diversification. They have increased the ceiling of how much of the assets of a pension fund can be invested abroad, and still the pension funds are well below the ceiling. So I think in the next 2 or 3 years we're going to see a big expansion there, and of course especially pension funds that have a fiduciary responsibility to be very conservative, they want to go with very solid names, both from the domestic side as well as abroad.
Well, thank you very much, both of you, for coming in. Stuart, Alan, I love your publication.
Thank you very much.
Really great, Latin Finance, and Joaquim, Levy.